The biggest news is now we know where that 300 to 400 tons that's been onshored over the last, 4 to 6 weeks. I mean, who knows? Who knows who owns these contracts? People for years have said, when's it going to happen? You're watching a failure to deliver happen. You're watching.
Tariffs are hitting, gold is leaving London, and COMEX is seeing a massive delivery surge. Could this be the final spark that ignites the gold and silver explosion? Bill Holter reveals what's really happening behind the scenes. Before it's too late, stay tuned.
Well, we will either see it come out of the warehouses, or you'll know that the buyers took whatever the number is, 15, 20, 25% premium to not take delivery. And I mean, that was a trick used for years and years and years, that if there was a big buyer that was standing for delivery, often you would see that just go poof, it's gone. And that poof, it's gone without anything being delivered. That's a fiat, bribe or whatever, not to take delivery. Yeah, reciprocal tariffs. I mean, you might as well just use the two words trade war. I mean, that's what it amounts to. If you got, we're going to tariff you, you're going to tariff us. If you're going to tariff us, we're going to raise ours, you're going to raise yours. I mean, no matter what, tariffs will slow business down. Tariffs will create less cash flow in the system. And you couple that together with what is Doge doing? Is it $200 billion? Is it 500? Is it a trillion? Is it 2 trillion? All I know is whatever gets cut or canceled, that's money that's not going into the system. So now you have tariffs that are going to slow down the cash flow. You got Doge that's going to be cutting cash flow off to a lot of these goofy, woke-tard programs. So what they're saying, what they're telling you, and I mean, I think it's on purpose, because there's no way that Trump doesn't know that, tariffs are going to create less cash flow into the system. There's no way he doesn't understand that if we don't spend $500 billion, that $500 billion's not in the system. It's not part of GDP. What they're doing is they're cutting the lifeblood off to the Ponzi scheme. And I view it as, I really believe, because they have to know what the results are. This is a planned takedown of the system. Gold has been like a tractor in first gear. We've not really had any pullbacks. We've not had any big smashes, which we've always seen in the past. I guess the biggest news is now we know where that 300 to 400 tons that's been onshored over the last 4 to 6 weeks. A couple things. One, you said a year and a half gold rally. When did that start? What started it? Go back to when
2019.
Russia's reserves were confiscated, stolen, whatever you want to talk about, or whatever you want to call it. From that day forward, gold has done nothing but go higher, and that makes sense because foreigners look at Russia having, what was the number, $300 billion sequestered, and foreigners are saying, well, hey, if they can do it to Russia, they can do it to us. And what that's done is it's mobilized foreign sovereign treasuries, foreign central banks to offload treasuries, and they're buying gold with it. And you mentioned another 45,000 contracts. If you look at the volume for the day, I think it was a very low number, like 7,500 contracts or something like that traded. So if that's what traded, then how did they open 45,000 new contracts? What I'm getting at is can the COMEX numbers really be trusted? I mean, who knows? Who knows who owns these contracts? But just understand, people for years have said, when's it going to happen? You're watching a failure to deliver happen. You're watching the nuts and bolts of that happen. I mean, think about this, Chris. If you go back 10 years ago, I would bet that there were not 300 or 400 tons for the whole year delivered. And you cannot print gold, you can't print silver. So if somebody's standing for delivery, and they don't accept a 20% profit bribe, they want the metal instead, this will end in a failure to deliver. That's going to happen. Is it immediate? Well, it looks like we're in the process of, just simply because of what's standing for delivery in both silver and gold, it's going to happen fairly soon. Yeah, otherwise you get a failure to deliver and then COMEX is done. I mean, the COMEX gold fails, COMEX silver fails, and what does that mean to all the other contracts outstanding? Like, corn, wheat, fuel oil, interest rates, et cetera, et cetera. If you prove two contracts to be completely, a complete fallacy where they can't deliver, my past partner, Jim Sinclair, used to pose the question, what is a contract worth if it cannot perform? And the answer is zero. And he posed the possibility of seeing COMEX gold at $10 an ounce offered, no buyers, and physical gold bid at $50,000 an ounce and no sellers. If it's 100% false, I mean, yeah, you've got some people who believe that, and I'm sure have acted on it. So you've got some flow because of the tariff news, but I don't think tariffs are a real underlying reason to be onshoring, or for London, Switzerland to be sending, buku amount of gold to the United States. I mean, I think it's pretty obvious. In 300, 400, 500 tons have been onshored. I mean, you don't have to be a rocket scientist to put those two data points together. I think if you follow that through from start to finish, he's talking about a failure to deliver. I mean, that's the bottom line. And again, I've said for many years, my thought is that silver will be the one that fails to deliver first. And one of those bullet points is talking about, central banks lend gold, but there is no lender or supplier of last resort in the silver market. So I've thought all along that silver would be what fails first and acts as the pin being pulled on gold's grenade. Time will tell. It doesn't matter whether gold or silver fails first, but they're going to fail to deliver. And when they fail to deliver, then, what is the saying? They become unobtainium. Gold and silver. I'm going to say from late October into February, there was more sell orders. I took personally more sell orders than I'd ever taken combined in the previous 15 years. And my thought process, just after talking to some of these people, this is not people taking profits. This is people running out of money and needing the capital. And I think it goes hand in hand with the feeling that there's less money on the streets. Now, in the last 3 to 4 weeks, we've definitely seen less selling, and then the buyers are picking up. So that phase or whatever it was, I think that's coming or has come to a close.
If you found this insight valuable, don't forget to like the video, subscribe, and hit the bell icon. Stay ahead of the game and never miss the latest updates on gold, silver, and the economy. See you in the next one.